Morning, folks. Already have a great number of people that have joined us. Grab your coffee. We're going to kick off here in just a second. And as usual, no matter where you're at in the world, please let us know. That's one of my favorite things, is seeing where everybody's at. I know we already got London represented. We got Saudi Arabia represented. Hey, Dr. Abdullah. I love that you're on every day. So, Chuck, Dr. Abdullah is actually an oil and gas cybersecurity inventor, has a company in Saudi, and he asks really good questions. So I ask you the hard question around security. Just go grab your CIO and tell him to come on, and they'll do it. But everybody, again, let us know where you're at. And let's go ahead and get started. We have a good group in here already today. Good morning, everybody. Welcome to the 27th episode of FinTech Insider, the Breakfast Show US. I'm Sam Maul. My hair continues to grow. The good news is tomorrow night, I get my first haircut in almost 2.5 months, so my afro will be gone. I am the 11FS Managing Director of North America. I'll be your host for the morning show. Let us know where you're watching from. We love hearing from you and knowing where you're based. Please share this stream too, everybody. There's a share button. Share this like crazy. Let folks know that you're doing this. Hit the like button or any other button that you see there, and subscribe to 11FS on LinkedIn so you never miss a show. As you may remember, last week we had a competition on the best questions asked during the live stream, and I'm happy to announce the winner is, and Sidrahar, man, I apologize because I get your name wrong every single day, but you know that I love you, man. Sidrahar Ramakrishna. Close, it's got to be.
Well,
yeah, so I love Sidrahar. He's based in San Francisco. He's a company founder. Man, he always asks great questions. His question was, and this actually went to Anna Rare from Reuters last week, beyond the obvious rise of digital and cashless, what non-obvious trends do you see emerging post-pandemic? And that became a topic of conversation internally at 11FS too. So Siddharth, I'll reach out to you. You can reach back out to me on podcast@11fs.com as an email. We'll get you your t-shirt, and we'll get Anna to answer that question specifically. But today, everybody, we're joined by Chuck Fagan. Chuck is the president and CEO of PSCU. And we are going to talk a lot about what PSCU does and how credit unions are handling this crisis. What I will first say is I have known Chuck for a while. Chuck has, I'm going to guess, Chuck, 23 to 25 years in payments and credit unions now. Is that about right?
32, yeah.
32. All right. You need to update LinkedIn. It only went back to 97, buddy. That's pretty good. 32, man. All right. I'm impressed. But just think about that 30 plus years experience in this space. And I think I can safely say over the past 2 months, you've never done anything or seen anything like you've seen.
You are absolutely spot on. And first off, Sam, appreciate you guys having me on. This is such a fun format and powerful what you guys have put together. And I want to answer that question at some point today that was highlighted for last week.
I love that question. I will definitely ask you that because I think it's a good one. So first, let's do this, though. Let's set the stage for everybody that's on. And again, we do have a global audience. So bearing that in mind, can you talk about, one, who PSCU is and who your customers are? What are the services you provide?
Yeah, absolutely. And on me, my first job out of college, 88, was at Virginia Credit Union. So a client of PSCU's. And I learned PSCU converted to First Data in 89. So I learned at that point in time, entering new accounts and handling day to day. I started at the organization, as you referenced, in 97. And what PSCU is it was really founded in 1977 as a scale play. Credit unions couldn't get the pricing, couldn't get the terms to really put a competitive credit card product out in the market. And 5 credit unions down in the Tampa, St. Pete area really pooled their volumes, made themselves look like one client, and went into the processors to get the scale. And that model has now grown to be more of a technology company, one that we really lean on our partner now, Fiserv, to route transactions. And we've built the consumer experience around that, and we've built the credit union employee experience around that as well. So now 1,500 credit unions and about 4 billion transactions a year, 36, 37 million accounts.
Damn. So, Chuck, do me a favor, if you don't mind. Just so you know, we've got folks from, if you're ready for this, Manila, Saudi Arabia, Egypt, Scotland, Germany. So all over the world right now,
wow.
Chuck, on this. So can you talk about And real quick, like under a minute, what's the credit union market like in the U.S. as compared to other parts of the world?
So I think it's, I've spoken at meetings in the UK and Ireland, and it's a pretty advanced credit union system here in the US. Very technology focused, use of QSOs. PSCU is a QSO. So some credit unions have realty offices. They have insurance brokerage firms that, are attached to the credit union. So pretty progressive and very, 115, 117 million consumers in the U.S. are members of credit unions.
And I mean, so let's put this mildly, a large number of credit. How many credit unions ballpark are there in the U.S.? Do you know?
So crazy. When I started back in '88, there were well over 15,000. Now we're down to 5,100.
Yeah. So everybody hear that number again. In '88, 15,000 credit unions, now down to a third of that. And what are the main drivers behind that, Chuck? Is that acquisition? Is that merging? Is it just a changing market?
Yes. The answer, all of that, really. And you've got only about 1,400 of that 5,100 that's over 100 million in assets. So yeah. There's, in a situation like COVID, there's anticipation, and about 250 credit unions go away through consolidation on a normal year. Yeah. What will happen as a result of COVID-19?
Yeah, and we've talked about that a few times. We've had like Joe Castillo, I think our very first guest in this community bank out of Oklahoma. So we've seen a lot of consolidation in the community bank space. You think about in the credit union space, and I agree with you, Chuck. What are we going to see? I don't want to say post-COVID because I'm getting tired of that comment. Right, just going forward. What are going to be some of the outcomes of this? Are we going to see further consolidation? I do know that we're making up a lot of this as we go. I think that's a nice way of putting this.
It is. I was on a video cast last week with a group of credit union CEOs, and one of the CEOs said, look, we're not allowing our team to use the phrase looking back. It's now forward, and what that will ultimately look like. And, at PSCU, and I know at all FIs, they're really doing a lot of scenario planning around just that. What will it look like? How will the interactions with the consumers change through the branch network, through payments? So I think a new normal will settle in, and you're right. Post COVID doesn't get it done. It's what the new world looks like.
So Chuck, I'm curious from your opinion, because I mean, again, CEO and president of PSCU, when you're in a leadership position like that, I'll tell you for myself, I like that mindset, right? There is no looking back, right? This is this is an important tipping point, I think, in financial services, in who credit unions are and who they are going to be and what services they provide. If you weren't along the digital path before, if there was ever a wake-up moment, it's been the past 2 months.
So the analogy I use there, Sam, is a couple of years ago, I had my shoulder reconstructed just from college sports. And the doctor told my wife while I was still out, look, the nerve block is going to wear off in 24 hours. If you don't start him on the pain medication an hour or two before that, he'll never catch up to it. And I think what you're saying is, those credit unions that really had not ignited the path towards a really digital environment, it's going to be really difficult for them to catch up.
Yeah, I agree. I mean, it's that time. So do me a favor, talk a little bit about some of the services you provide, right? What is the secret sauce for PSCU? What is it that you do that really makes you all stand out? Because you do. I mean, if you're in the credit union space, PSCU. Just put it that way.
Appreciate that. And it's, really originally founded around credit, because the credit card product was what those 5 credit unions got into. It evolved into obviously debit, and we have a 7x24 contact center that not only handles card-based calls, but handles general customer service, member service. So a credit union, you dial 1-800 and PSCU is answering that phone taking the mindset that if the consumer never knows PSCU exists, then we've had a successful interaction. We have a collections unit. We've now built a full native cloud digital banking application that blends the payments in. You think we mail the plastic and it comes with the sticker, dial 1-800 activate. Well, we have the full API set to know that the card's not activated. Next time the member logs in, let's prompt, would you like to activate your card now? Yes, and it's done. So really that convergence, we've tried to build that in, and more technology has come as a result.
And I want to talk about credit a little bit. Hell, it's built into the name, right? Credit union.
Yeah.
This is obviously one of the areas that is going to require so much focus on how do you service customers, how do you meet their needs. We've talked on this show extensively about the PPP loans that have been going out to small businesses and the stimulus checks that have gone out to individuals. I read a stat today that on late payments on BHA-backed loans have doubled over the past month. I know this would be our second monthly cycle of, say, rent or mortgage payments in a country with, an unemployment, I think 30, I'm trying to remember the exact number of Americans that have filed for unemployment now. A lot, everybody. I think it's a lot. I'll just stop there. I'm only on my first cup of coffee, Chuck. I don't know what's wrong with me. Normally I'm like 5 in. It's been a hell of a morning. What role will credit unions serve when folks are this focused on finances, both from small business and individual consumers? And how are you helping your clients out with that?
The overall, and this is a global statement about credit unions, they're about people helping people. That is really the mantra. And, initially PSCU made available to all of our credit unions the opportunity to skip pay, set these up very quickly, lower interest rate, different programs that really aligned with what the consumer needed right then and there. Through our collections unit, credit unions have called and said, hey, we want you to back off those calls a bit. Let our members get through these cycles. Credit unions have been involved in the PPP loans. And as we look ahead, I think credit unions will have an okay year this year. They'll certainly be down. But I think the real test is going to be 2021, because we don't know what the delinquency, what the charge-off cycles will look like. And 2021 is probably when a lot of that gets exposed.
So the CBO, so here we're talking about the Congressional Business Office, the accountants for the federal government, nonpartisan group. They came out with their forecast, and they said they believe unemployment will drop to 9.5% in Q4 of 2021. So I'll flat out say, I agree with you, Chuck. I think this to me is the equivalent of like a rolling wave, right? It's just getting bigger and bigger and bigger. And we're going to continue to see the impacts. We haven't seen the impacts fully yet. Not even close.
Completely agree. And I think we haven't seen what the strategies will be coming out of it either.
No, at all. Because the reality is we're just trying to, the ship is linking and we're bailing water right now, right? We're trying to get the sump pumps. I'm going to a naval analogy. I can't help myself. We have a leak, a massive leak right now in the ship, and we're just bailing water right now. We haven't talked about, how we're really going to address what we're going to be doing. Sidrahar came up with a great point. I'd like to get your opinion on this. There's so many paper touch points in banking today. So paper checks, print a form and mail it, notary signatures, medallion signature guarantees, etc. What does PSCU do with this reach and leadership from a regulation, policy, and tech perspective to help kill these archaic methods? And then he did the hashtag kill checks, which still makes me smile. I couldn't agree more.
Yeah, so we're spending considerable time on that. Lumen Digital is our digital banking application, trying to automate as much as possible. You go back just to the new customer or the new member enrollment process, that part needs automation. So we're looking at how do we focus on clicks in order to become a member of a credit union versus here's your signature page. You got to sign and get this on file. So that being a start. But more and more around the card processing and all of the things we do around that, we have to do it kind of like a financial institution has to look at their customer. In some cases, 4 generations of customers at a bank. My father, he still wants to be active with the branch. We're trying to get him, at 79, trying to get him more engaged on the digital side. But, my grandson, your grandchild at their ages, will they ever learn to write cursive? It doesn't look like they're teaching that anymore. Will they ever learn to really spell like we did? And then I think it goes now to, instead of, just the focus mobile first, I think it goes to mobile voice first. And do they ever learn to type? I think it goes down all these channels as you think out years and see how fast this stuff is occurring. So a lot of focus around what that voice enablement will be. And in our case, working with credit unions below 100 million up to, credit unions well above 10 billion, we have to take the same approach. We have to build, kind of API sets for those larger credit unions, but then we have to build it all up to, just put your logo on and use our technology that's behind the scene for some of the smaller credit unions that don't have those capabilities. So I guess the answer to the question is we're doing kind of a varying level of support and push in those areas because that's what the financial institutions kind of demand of us.
So here's what I love, everybody, and hopefully you smiled at that answer too. So you've got the president and CEO of an institution supplying these solutions to credit unions, and he jumped right into voice, which we've heard debate on over and over again. I think the debate is well past dead. I think if you're still debating that, you might as well still be debating whether mobile phones will ever take off as the branch in a person's pocket, which we all know how that argument settled. I agree with you, Chuck. I mean, my son is 14. I was reading some of his notes, and his handwriting is horrible. It's absolutely horrible. It looks like chicken scratch, right? And I asked him something like that, and he's like, "Dad, I never write. I type everything." And he's right. Actually, I'm watching him. You and I are both watching our kids and grandkids doing homeschooling right now. And how they interact. If you would have told me that's how this was going to be, or is this potentially part of the future, I agree with you. I mean, I guarantee you, my son's signature floats week to week on what it looks like, and the idea of him having a SIG card on file is going to be rather humorous. Another good question, Chuck, I want to ask. This is from Zarik. He's at Discover in Chicago. Yeah. Does PSCU rely on third-party vendors for recoveries, or do you handle charged-off accounts in-house? How do you see servicing a delinquent and charged-off customers changing the recessionary environment for PSCU? And man, that's a great question based on numbers that we're seeing on forbearance and everything else right now.
So many credit unions obviously do that themselves, and when it gets to that recovery point, they bring in attorneys or offices in their geography that they work with. Our collections unit will go all the way through recovery as well, and we've got not a huge business, but we probably got 150 employees in that group that do from the friendly reminder calls 30, 60, 90 days to all the way out on the recovery, and it's set up with all the technology around auto dialers and the user interface systems that we've put in place. So we have to connect into the core platform as well to be able to get to the data to be able to collect on their behalf. But we'll do full scale all the way through the recovery process.
So another great question that came in. With respect to credit unions, what do you think the impact of the new digital banks are going to be? Will they completely disrupt this market? And let me just add that Chuck could on a good day jog to Capital One's headquarters, so in Virginia. So the idea of new digital entries, how you've been dealing with that for 20 years, Chuck?
Yeah, and it's amazing how fast some of them are taken off. You see $1 billion in assets pretty quick. And $1 billion in assets is a large credit union. So I think it will and is disrupting. It's forcing that technology push. And I think the other thing it's pushing, and this answer goes to the question you had last week, Sam, is credit unions, community FIs really focus on customer experience, member experience. And I think coming out of this, credit unions are going to have to be much more aware of the data that they have. So it's going to, I think it's going to get to a personalized customer experience or personalized member experience in our case. And the data is what's going to drive us there. We know more and more about the consumer, and we're going to have to use that data to really align with how they want to connect with their financial institution. And that's the only way that they're going to be able to put up a pretty solid business case to keep a consumer interested in the credit union versus some of those digital FIs.
Chuck, in my opinion, there's a narrative, and I think it's a lazy narrative, to say that banks and credit unions don't understand technology. And I think you've actually, I know I get tired of the narrative, right? Because banks and credit unions have embraced technology from the get-go. They might be slower to deliver in a lot of cases, but there's also a risk model that's associated with that. And just in the short conversation we've had, you've already touched on voice. You touched on an incredibly strong API system. Now you just hit on the data and obviously the AI side of this. So I'm giving you applause right there.
Thank you.
A good question from Derek Sutton. I love Derek at Autobooks. What's your take on the non-bank providers like Square being invited into the PPP loan process? So Square processed over 40,000 PPP loans. What will be the impact of providers on the relationship between credit unions and small business moving forward? Good question, Derek.
It is, and I think it's, you look at PayPal. PayPal's a lender. They've been a lender for a long, long time. So, I think as we get those funds out in a fast and efficient manner, some's going to be through the traditional FI, and some's going to be through these fintech providers who are, kind of emerging into the market or have already made a stand. So I look forward to broader access for the consumer. I think that's the right way and direction for the industry to head.
That's a very American response. And here's what I mean by this: the idea of broadening the market, having more players come into a market that increases competition. We'd like to increase competition, but that also drives up the responsibility of folks like yourself that are running companies to embrace technology, right? And to embrace different solutions. Basically, I'm going to say this and everybody can yell at me because I hate the term too. If I hear new normal one more time, I should have like a shot glass next to me, and every time we say new normal, take a shot. But you have to, right? And that's that question I want to ask you, Chuck, because you brought it up. So that was one of the questions that came up last week was, what do we see? What are going to be the surprising things we see coming in the future? That this has been a driver for what we've been going through the past few months has really been a driver, in your opinion. What do you think we'll see be major initiatives or changes?
So I think first off, the branch has to change. I think the branch, which largely they're by appointment or through drive-through lanes now, they become life-changing event type appointments. Buying a house, you're planning retirement, you're buying a vehicle maybe. I think ATMs are going to see a pretty significant hit because cash, you look at the $12 to $15 range transactions still being 50% cash in the US. And I think there's going to be a serious attack on that with contactless. The whole notion, and whether it's been proven or not, to carry virus, paper currency does, just the thought of it push more and more people towards contactless and the mobile wallet. So I think that will take off. And then, I do think voice gets an acceleration out of this as well. Not that it wasn't moving fast already, but I really do think that happens. And I think from a credit union standpoint or smaller FI, they were thinking with contactless, let's get that out through the natural reissue cycle or lost stolens. I think now you're going to see mass issuance because that's in the best interest of what the consumer's looking for.
I hope y'all were taking notes on that answer. I would agree with all those. It was interesting, Chuck. I was listening to Kara Swisher was interviewing Mark Cuban, and she said, if you were 18 years old, what would you go into, right? What would you study? What areas would you go to? And he said two things. He said voice, but what he said was the underlying technology, right? The APIs, the AI that deals with that, to drive that, and even the same with AR, right? So how do you bring digital into everyday life, right? And how do you remove another one, I hate saying friction, but how do you remove touch points, right? So it is that much simpler, it's that much easier, and it's that much quicker to engage. And so, I mean, I think those are some of those key drivers that would have happened anyways, but this is accelerating it.
Yeah, I don't think the branch goes away, but the branch becomes as much marketing and you know, kind of you align with a financial institution because of maybe proximity to the branch, but you ask the consumer how often you visit the branch, it's hardly ever, but it's knowing it's there. So it does become even more of a marketing tool than anything else.
Yeah. And let me just add, and this is true about credit unions and community banks, and especially about credit unions, the idea of servicing underserviced or underrepresented areas when it comes to financial services. It's that's why we talk about community, right? So much, Chuck. I mean, they're so that regardless, there's still that physical touch point and that need to engage. I agree with you. It steps up the ladder, right, of prioritization. It's not the everyday engagement that you typically have. It's the more complicated and better services you can provide in a much simpler solution. I can't believe I'm going to do this, but I'm going to do it because Amanda Moore, I love this question. I was going to let you go, Chuck, but now I got to ask this.
Perfect.
Amanda's an MBA grad student. She just asked, how do you see younger generations picking a credit union if they expect geographical moves several times in their lives? Does it make sense to change credit unions with a move or remotely engage via digital services? Man, that's a good question.
That's a fantastic question. And I think the answer is no. You can align with a credit union. Our offices are in St. Pete, Florida, but we spend part of the year in Virginia, and I'm a member of a credit union in Chicago. So, the digital access, I'm not inhibited in any way from conducting business with my credit union. So you look at most credit unions now, whether they are of a size that they offer the technology direct or they lean on a partner. Certainly PSCU is a provider. That's not to mean some of the larger credit unions don't lean on us as well, but they're every bit capable from a digital front, and I don't see the need to switch.
It's a good question, great answer, and I agree, right? I'll flat out say I've been a member of the Navy Federal Credit Union for, 25 years.
Fantastic credit union.
And I've lived all over the damn world. All right, folks. Time's running out, and I know Chuck and I got to go on to our next Zoom call. I'm so excited, by the way. I love being on video calls. Chuck, thanks for joining us. What's the best place for folks to go and learn more about PSCU and what you're doing?
PSCU.com will tell you everything you need.
All right, that's it for today, folks. Tomorrow, I am joined by Dallas Wells from Q2E Banking, and Dallas Wells has the best Texas name for a Texas-based company I've ever heard. If you know someone who'd be perfect to come on the show, don't hesitate to reach out to me at Sam Mall on Twitter or at podcast@11fs.com to send us an email. Folks, thank you so much for coming on. Christoph, thank you for telling me what time of day it is in the Philippines. It's basically 11 o'clock at night, everybody. Wow. And everybody, thanks for joining. We really appreciate it.
Sam, thank you.